In the retirement space in particular, taxes are different. Prior to retirement, it's relatively intuitive, though you do have some unusual phase outs and credits like the earned income tax credit and the new healthcare tax credit. But in general, it's a reasonably intuitive system prior to retirement for middle and upper middle income people. But once you hit retirement, it's not so intuitive. It creates a lot of either pitfalls or opportunities depending on how you view the system. So when we start with tax clarity, we're going to start exactly the same way that we would with any other client. We're going to go ahead and enter the client's data. We've got John and Jane Sample. I've got them both born in 1950. I always choose tax date. And let's just say, for example, that they have no earned income. They have IRA distributions in the amount of, let's say their typical IRA distribution is $50,000. They have a non-qualified account, so we typically count on, we expect maybe $10,000 of net long-term capital gain this year. And let's say that we've got a $50,000 Social Security benefit, so not an uncommon client. Now, when we click Calculate, we're going to get that initial tax map. So this is the idea, what is the rate that our client would pay on the next dollar of ordinary income withdrawn? So in this case, we see this opportunity right out of the gates. We're sitting on the spike. This is probably one of the most painful last few dollars that they harvested from the IRA account. So maybe one of the things that we might want to suggest to them is, hey, let's create some kind of alternative. So I just click anywhere on the tax map. And let's say that I do something different. Okay, so just by taking $2,000, reducing that IRA distribution by $2,000, I'm able to significantly reduce the amount of taxes. I actually, by taking that IRA distribution down by $2,000, I reduced their tax by $908. So in terms of the impact on the client, that alone would be a pretty significant change. And what we've just hit on is the concept of an effective marginal rate. Not necessarily what the bracket says, but instead, how much of your last dollar did you lose to Uncle Sam? That's what tax clarity is designed to help you help clients see, the effective marginal rate. In other words, the single most valuable number from a tax planning perspective when you're making a financial planning decision. Yet there is no current software out there to help your clients understand that landscape. This is really the first landscape software that allows you to see the impact of those movements on the client's plan. And it creates a great opportunity for new client relationships.